Hey everybody, welcome to Forex Trading Analysis for Synergy FX. It is 9:16 p.m. on July the 17th, 2012, and today we're going to be looking at a few pairs, but quick risk disclaimer. So foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investment, so please don't invest money you can't afford to lose. Seek advice from an independent financial or tax advisor, and all information provided is for educational purposes only and should not be construed as trading advice or counsel. So, few pairs I did want to take a look at, first of all, for tomorrow. We had Ben Bernanke speak today. Nothing really new coming out of the press conference, and the dollar shot up, which is always an extremely good sign for a currency when not really much happens and a lot of buying takes place. So since no QE3 was hinted at, a large number of people started to buy the dollar. You saw that a lot in the U.S. dollar, Swiss franc, and a little bit in the CAD as well, and a couple other pairs. So it definitely has been a good week for the dollar, and my bullish sentiment has continued to be seen, and it looks as if we are going to remain in this bull trend as we had a day today that signifies people are really ready to buy the dollar, and that supply is definitely limited, and that price should shoot up in the next few months. So again, U.S. dollar, I'm going to remain bullish. So for Thursday tomorrow, we do have a lot of U.S. dollar news. Philly Fed comes out, which is always a pretty important number. Existing home sales and unemployment claims as well for the dollar, all in a pretty successive order. Pretty early in the day too, if you're on the East Coast here in the U.S. And as well as retail sales for the Great British Pound, which should also be a interesting thing coming out of that. So. Sorry. First pair I did want to take a look at is gold dollar, which is going to be an interesting pair over the next few days. Currently, we're trading at 1584.69. Since I am bullish dollar, I do think that in the short term, gold will continue to fall against the dollar. We've seen a little bit of a fall off over the past few months, and gold really has been in a well-deserved consolidation. We've seen extreme price movements for the past somewhat 11 years. This is only 5 years. So out of 5 of the last 11, we really have seen a extreme push in the price of gold to the upside, and people are always willing to hold gold. So gold is going to continue to be a good investment for me. I really do like commodities right now, as I don't think the stock market is going to perform very well over the next few years. So I think commodities are going to be a good place to place your money. I read a lot of what Jim Rogers has to say, so if you want to go ahead and head over to his blog, he posts stuff almost every single day about his views on the markets, and agricultural commodities are his big thing right now. He is a holder of gold, and since he is one of the world's most wealthy billionaires and investors, I genuinely like to listen to people like him, because they are really people who have had success in this market, are the people who I do like to listen to. So again, Jim Rogers, if you don't want to give him a listen, my ideas are based around what he has to say. So definitely a good resource. The one thing that I do want to take a look at just technically for gold right now is that if you are looking to enter a buy position, we are currently just above the 200-hour moving average, which is essentially the same as the 100-hour, and price is also there as well. So we sort of have a nice little Three's Company crowd, and if we do see a huge push off in either direction the the dollar or gold over the next couple of days, and it should definitely be easily reflectable in the bounce off of the 200 or 100-hour moving average. So if you do look at the daily charts, we are below the 200 and 100. So if we are to break back below, which I think may be possible if we do have some good dollar announcements tomorrow, then we could continue to see a fall. But again, I will be looking to buy gold as it does continue its plummet from highs. Not really a plummet, but it's consolidation from the highs. And yeah, it is definitely going to be an interesting time as gold. If gold does continue to fall, I do think people will begin to buy it more and more, and we should see in about 10 years we should see a good good price movement from gold. Not that you remember that anyway, because this is just some random video. But anyway, those are my views on gold. So, other pair I do want to take a look at really quick is the Aussie dollar, which is sort of in a similar situation. Right now, the Aussie dollar has currently just broken above the 200-day moving average, and 200-day is slipping to the upside. So if you want to buy the Aussie, this is technically one of the best trades that I've seen over the past few weeks. Moving averages has been sloped at about zero for the past few months, and really past few years actually. And we could see a really big move from the Aussie dollar. Aussie does sort of tend to disregard the technical situations as much, but since we have just broken this pretty big level, I do think that we should see a continual push higher in this bull market. It may not be over for the Aussie, as they do continue to benefit from the lackluster stock markets in a bunch of countries and commodities rising because they are a commodity-based economy. So those are the two pairs I really want to take a look at. Also, the U.S. dollar, Swedish krona, is currently in oversold positions, and since I am a buyer of the dollar, I really do like buy right here. We saw a pretty strong push down. We also are just above the 100-day moving average and almost in oversold territory as well on the daily chart. So definitely I do think that buyers could step in and push this pair back towards highs around 7.2, maybe 7.3 over the next few weeks, and that's definitely a pair that I really do like technically as well, especially since buying dollar, in my opinion, is never a bad play right now. So yep, that's what I have to say about the markets today. Thank you very much for watching. If you watch these on a continual basis, I really do appreciate it. I'm going to try to make them better and better. I think I've gotten a little bit better as time has gone on, and my track record has sort of proven itself if you've been tracking my calls at all. So thank you very much for watching again. Please follow us during the week at SynergyFX, and good luck trading.